This is Justin with the Green Residential Housing Show. In this video, I'd like to talk about mortgage rates. The 30-year mortgage rate. It's been moving up for a while. It's pulling back a little bit now. But is this a trend that we're going to see further movement upward, or is it peaking out now? Is it going to move down? Well, in this video, I'd like to delve into that subject and examine some different possibilities. So let's get started. So here is the 30-year fixed rate mortgage. This is an average, and it's put out by Freddie Mac. Now here's Wikipedia. You can see that Freddie Mac is a federal mortgage corporation. It's sponsored by the government, but it is also a publicly traded company. So what they do is they purchase mortgages and they resell them. So as you can see, the 30-year fixed rate has been rising. It has gone close to 8%. Now, I believe there is a clue to what is going on here as far as the trend goes. So first off, let's zoom out and we can get a better picture of what's going on here. Now, it peaked out over here in 1981, and since 2020, it's been in a macro downward trend. But now we have this move. So what is going on over here? Well, I believe if we look over to the 10-year yield, so this is the 10-year yield. Now, what is the 10-year yield? So if we jump over here to investopedia.com, we can see what does the 10-year treasury yield mean? And we can see the answer right here. The 10-year treasury yield is the yield that the U.S. government pays investors that purchase the specific security. Purchases of the 10-year note is essentially a loan made to the U.S. government. So it's the money that investors receive from loaning money to the U.S. government. Now, as we can see, it's been also in a downward trend since 1981 to 2020. What I'd like to do is I'd like to compare this chart to the 30-year mortgage that we just looked at. Okay, so I have the 10-year yield on the top right here, and on the bottom I have the 30-year mortgage. And as you can see, the 30-year mortgage does follow the 10-year yield quite well. So if we focus on the 10-year yield as far as getting clues for what the 30-year mortgage is doing, we might be able to see if this is going to be a new trend that continues to rise and make higher highs, or if this is something that will eventually turn over and continue to head down. So let's focus on this 10-year yield and see what answers we can find. So if we go back to the very beginning of the 10-year yield, it starts way back in 1912. Now, I switched it to lines versus candles because when it's candles, this is very difficult to see the way this chart was recorded at this time. So switching it over to a line is easier to read. So as you can see, there's different boxes, and each box is a different part of the chart. So from 1912 to 1920, the 10-year yield basically goes flat, and then near the end it starts to rise up. It comes to a peak. That peak takes place in 1920, and then from 1920 to 1928 we have a decline. From 1928 to 1932, the 10-year yield rises, creates this peak, and then declines again. So it begins to rise up again, and in 1932 it comes to a peak, and then from 1932 to 1941 it goes into a long protracted decline. Now, it is my belief that this part of the chart right here is actually a structure that is being repeated once again, however, on a very large time frame. So if we were to copy these different parts of the chart, for instance, if we were to copy this first box from 1912 to 1920 over here, I believe it would be a potential match. Let's try doing that. Okay, so to make it a little easier to see, what I've done is I've changed the color of the 10-year yield to purple, and the fractal that I copied is in blue. So as you can see, this first part right here, from 1912 to 1920 is copy and pasted over here. So from 1941 to 1981, it follows the basic rough idea of what it did from 1912 to 1920. The 10-year yield begins at a low level and it rises up. Now, it's not exact, but the basic idea is repeated. So if we continue on what took place in 1920 to 1928 over here, it starts at a peak and then it declines. Well, if we go over here to 1981 to 2020, basically, this long, incredible stretch of time follows what the 10-year yield did back in 1920 to 1928. So let's keep moving along. So from 1928 to 1932, box 3 here, let's see how that matches up. So once again, we see that what's taking place today does harken back to what took place during that time. Price has been moving up, so if it continues to follow this macro structure, we should eventually see the 10-year yield begin to drop. In fact, at a certain point, it may drop quite drastically, like right here. Of course, the way it plays out is probably going to be unique. It's not going to follow this exact, just in the same way that this downtrending part didn't follow it exact, but it does follow the overall basic idea. Now, speaking of things not following exact, let's look at this peak here. So it is possible that while this looks like it has completed this peak, which it very may well have done already, there is a possibility it could pull back up and then drop. So we could potentially see another peak form here in this greater peak structure that is playing out. That's speculation. It may not do that. It may just continue to fall. So to conclude, from looking at the 10-year yield, we can get a clue that it is likely that we are seeing a counter trend to the overall prevailing downward trend. So jumping back over here to the 30-year fixed rate mortgage, we can see that the 30-year mortgage follows the 10-year yield. Furthermore, we can see that on the 10-year yield, we are potentially at a peak. So this may soon begin to trend down. This would likely affect the 30-year mortgage rate as well, in that it would also continue to move down. Now, in the short term, we could see potentially another peak in this overall peak structure that is being formed. But the bigger outlook would be that this move up here that we are seeing in the 30-year mortgage is really just a counter move, similar maybe to something like this. Now, we'll have to see how it actually plays out, but seeing how the 10-year yield has followed its own history quite well for the most part, it is a likely possibility it's going to continue to do this, and we will see a drop once again in the 10-year yield, which will reflect in the 30-year mortgage rate. Well, I hope this video was helpful. If you did find it interesting, it'd be much appreciated if you hit that thumbs up button. This is not financial advice, but if you did enjoy this type of technical analysis and you'd like to see more of it, I recommend hitting that subscribe button if you haven't already. I'll continue to follow this chart as it continues to develop. I'm so glad you caught this video. I hope you catch my next one. Have a great day, and bye for now.